Good morning, guys. Andy Demi here. So I've been kind of asked, whether I could share, essentially how I go about making a trading decision and then ultimately placing a trade. So I wanted to show you in this video, step by step, exactly how I go about doing that. Okay, so a good professional trade setup requires not just the technical part. So one of the things that we need to identify is, is it time to enter? What is the price that we want to buy it at? What is the protective stop? And what is the take profit? Once you've figured all of that stuff out, then it's about making sure that you do correct risk management. So that if we're wrong on the trade, which we can be, of course, then at least you're not going to lose all of your capital. So following good risk management is really, really important. So I actually happen to be looking at a trade setup, and I thought, you know what, let's record this and then I can share it with you. Okay. So I want to show you firstly, I actually made a post on this in the group, but essentially the first kind of clue that I'm looking for is, what is the higher time frame telling me? Well, on the higher time frame, on the weekly chart, I'm basically looking at this and thinking, okay, well, look, clearly we're in a downtrend. However, the markets don't move in a straight line. They move in waves. Okay, they move in waves. And, this area here happens to be an area where the wave should be ending quite soon. Okay, and because we have basically completed the cycle of A, B, C, D. We've got to the 1618, which is a Fibonacci extension. If you're a beginner, don't worry about that too much. And essentially, so that the buyers might be coming in here. Now, I want to really emphasize the word might be buying here, right? Because ultimately, this could go lower. And obviously, if it was a guarantee that the buyers would come in, then obviously we would just buy immediately. Okay, so with that kind of background, what am I going to do next? Well, I'm going to go on to the 4-hour chart right now. Now, typically, I would do a little bit more than that. I'd go to the daily chart and so on. However, I'm just going to stick with the 4-hour chart. Now, what you might be able to see is we've got this kind of channel line here, and I've identified this block here where I am interested in buying. Okay, so there's different reasons there that meet my trading criteria. Okay, so I've got certain rules that have to be met, and this block here is an area where I am interested. Okay, now I could buy this and I'm hoping that the market is going to bounce up, but what I want to ask myself is, well, if it doesn't stop going down here, right, where am I completely wrong on this idea and we're probably heading lower? That's the question I ask myself. Now, for a lot of people, you'll kind of put a really tight stop, and that's absolutely fine. And, you'll try and basically buy and then immediately put a stop right there, really, really tight, and hope that you catch the move up. And that really works, because if you do that and you catch the move, you can make 4, 5, 6 times your money, right? Depending on how tight your stop is and how precise your entry is. So for those kind of traders, you might be looking at really entering right at the bottom of this box and then going with quite a tight stop. Now, I don't really like to trade like that, especially because I'm placing orders. So because I'm placing orders, that basically means I don't need to be in front of the screens. And it means I've got a lifestyle, right? So I can place my order, as I'm going to do shortly. I'm going to show you how to place that order. And then I can go off and do whatever I want with my day, right? I don't need to sit there staring at this and worrying about it. No, I'm just going to place my order, place a nice protective stop, and then leave it alone. So, where am I going to target, and where am I going to basically look to protect myself? Well, if I just bring in MT4 briefly, you will see that This is the area. So I'm looking at, so this is around 62.25, and then I'm looking at around 62.05. Now, according to our strategy, if the market basically goes down to here, so it goes past this orange line, which is about so this orange line is 61.71, it means that the setup has failed. So this is where it officially fails, because it's got to hold between these three lines here. Okay, so 61.50 is a round number. So what I'm going to probably do is I'm going to probably go about 61.45. Now, obviously, if I went lower, then I've got a better chance that I'm going to survive any push down. But if you go too low, what happens is your position size is so small that even if you catch that move up and you're right, you're not going to make enough to grow your account. And it's really, really important you find the right balance, okay, between giving it some room, but equally making sure that you are, making enough by being right. Because the reality is, if I buy, let's say here and here, right, and the market pretty much stops going down there and turned and then goes to my target, let's say here. Well, if I've gone with a stop down here, I'm not going to make enough money. Whereas if I'd gone really, really tight and I survived that push down, like there, I'd make a lot of money, right? I'd make a really big return for my risk. So for me, it's about just kind of matching your personality with how you want to trade, because the chances are if I go really, really tight against the trend, I'm probably going to get stopped out. And then what I'd have to do is I'd have to be available to then place the trade again and make sure that I caught the move. Now, I don't want to trade like that, because the reality is that I personally prefer to have a lifestyle, right, where I don't have to stare at the screens. I mean, I love the markets and I'll have them all around me and so on, but ultimately, I don't want to be having to be in front of the screens and like, oh my word, I've got to run to my screens. I've been stopped out. I've got to place the trade again, and then I've missed it. Right? No, that doesn't suit me. So what I'm going to do instead, I'm going to place my stop in the middle. Right? So there, about 61.45, and I'm going to go for a target of about 60. So 63.83 is a 38.2% Fibonacci, which is a good target to kind of go for. But I'm going to go just below the round number, about 63.77. So what I'm going to do with this one is I'm going to split my risk up. Okay, I'm going to split it up into two 0.5% trades. So what I do is I'll use my position manager here, and I'm going to put 0.5% trade. I've taken the reward to risk off. I'm going to hit buy, and I'm going to put my order at 62.26, and I'm going to put my stop, I'm going to go just there, 61.45. Okay, nice, giving it a nice bit of room, and I'm getting filled around the daily trading range, which is a good sign. I know we kind of broke it there, but it's a good area to be getting in. And then I'm going to target about there for now, okay, and we'll see how it looks about there. Now, that setup with that entry at 0.5%, that gives me a reward to risk of 1.83, which is not bad, okay, it's not bad at all. And for considering I've given this quite a lot of room, okay, and and that basically means for every $100 you're going to risk, then you're going to make $183. So on this particular trade, I'm going to be risking about just over $1,000 there, and I'm going to be looking to make $1,840. Okay. But you can work out the numbers, like depending on how much risk you've got and what your account size is. So let's place this trade. Something went wrong there. Hold on. I think I need to hold on. Let's bring this in again. Hopefully this time it's going to work. Let's bring it back down again. It gives us another opportunity to see it in action. 61.45, just below that. 63.75. Let's go open. Hopefully this works. No, that is typical, isn't it? Typical that something has gone wrong. Just hold on. Maybe I have not allowed expert. There we go. That's what the problem is. So you need to make sure that this is selected, otherwise it will not let us. And I'm going to just drag this in again. Now it will work. Okay, so we have to make sure that you go to tools, options, and then expert advisor and allow automated trading. Okay. Now let's do it again. 0.5%. Let's make sure we've got the right entry. 62.26. There, and then 63. About there. Okay, and the lot size, everything else is calculated for us. And hopefully now, there we are. Perfect. Now, what I also want to do is I want to add a second trade in, okay, for 0.5%. This time, a slightly better price, okay? So I'm going to go for about 62.05, but I'm going to use the same stop, roughly, and I'm going to go for the same target. Now, with this one, if you have a look over here, because I've gone for a better entry, the reward to risk is 2.78. What that means is that for every $100 that you risk, you're going to make $278. So in this example, I'm risking $1,000 to make $2,784. Okay, so I'm going to place this order right now, and that's it. And that literally is it. So let me just hit open, and that's it. My orders are placed now. So I'm going to monitor them. We'll kind of see, what happens. It's a good setup. I've got quite a few confluences. I've given it some room. Hopefully, I should get a nice bounce from here. I've got nice MACD divergence here as well as a few other things that I've kind of gone through, and it kind of matches up with that higher time frame. So hopefully, this is a good trade, and it fills me and goes up. Now, for some of you guys, you might be thinking, why don't you just buy it now? And you could, right? And you could buy it now. But the thing that you got to remember is, like, let's say I've got to be careful not to enter anything. But let's say you bought it here, right? If I have the same stop, look what happens to our reward to risk now. Now, by just jumping in with the same stop, we've got a negative reward to risk. So we are risking $100 to make $83. So think of it like this. By not being patient and waiting, if this goes up and you buy it, you might think, oh, well, yeah, I made the right decision. But think about it like this. If you do this over and over again, are you going to make money? Well, the reality is probably not, right? Because you're going to have to win about 60% of the time just to break even, which doesn't make sense. Now, the other option is, of course, let's cancel that. You could go with a tighter stop, but then you run the risk of being stopped out. So, which is, again, that's another option. You could go with a tight stop, but in this example here, you're against the trend line. It doesn't really make too much sense. Now, if, for example, let's say it went down and then broke the trend line, well, in that case, I can understand why you might go for, entering at market and going with a tighter stop, because you're playing a momentum play. But what the trade setup that I'm playing is not a momentum play. I am playing a reversal play that requires me to use limit orders, and a lot of the time, guys, I'm not going to get filled. Okay, but because I've got a decent reward to risk, because I've given a decent amount of room, because I've got enough evidence to suggest that this market might go up, it doesn't matter what happens on the next trade or whether I get filled or not filled. If I keep placing this type of quality of trade into the market, my account is going to grow, and That's the reality, okay? And that's why professional traders make money and retail traders who don't do this lose money, unfortunately. So anyway, guys, let me know what you think in the comments. Was that helpful? I know it's one of those commonly asked things, and you know, sometimes we say, look, you know, it's something what we teach, and we obviously we do teach it, and we go through in our programs, we go into depth how to build a strategy and so on. But I wanted to share that with you completely free, because I know that it's going to help some of you guys really, hopefully, understand the process of professional trading. Now, obviously, you're not going to be able to just go and mimic exactly what I do, but hopefully it's giving you some insight into like how you need to be thinking, how you should be placing your trades, how you should be like acting professionally. Because jumping into trades without cause, without proper reasons, without rules, without understanding your edge, is just pure gambling, and you're just going to lose your money. And that's why I created this video for you, so that hopefully it helps you out. If you're completely new, by the way, you know, you should definitely check out our free training course. We've got a free introduction course. If you haven't done it, definitely check it out. Let me know in the comments, and one of the guys will send it to you. And yeah, if there's any questions that you've got, or if you're interested in doing further training, obviously get in touch with us. But most importantly, guys, hopefully you found that helpful, and I'll catch you again soon with another video. But also let me know in the comments what content is the most helpful. Do you want to know more about technical analysis? Do you want to do some live trading? Do you want to do some psychology stuff? What is it? What kind of content is going to help you the most? And I'll be happy to see what we can do for you guys with the most popular answers. Have a good one. Take care, and see you soon.